You want to start investing and building generational wealth in 2023. You want to make sure that your kids and their grandkids and their grandkids are taken care of. If that is you, you've come to the right place, because in this video, we're talking about how to invest $1,000 in 2023. Now, before we get started in turning your money into more money, you want to make sure you actually have $1,000. And there's a lot of different side hustles you can do. If you're a college student, there's so many things like delivering on Uber Eats, TaskRabbit, selling your old junk on eBay, mowing lawns, freelance tutoring, reselling, heck, even working at McDonald's. Whatever you got to do to make that money, go get it. Cut back on the alcohol, partying, fancy Starbucks, because that's not what's gonna make you a millionaire. Once you have that though, let's get into step number one, setting up your brokerage account. Otherwise known as a stock trading account. There are so many different platforms out there, all of them which are free to use. And you wanna choose something as a beginner that is simple to use, but it's going to have enough complexity so that when you level up your trading skills and your experience, it's still gonna be even more valuable once you're able to unlock the other features that that platform does have. One of the apps that I love to use is Moomoo. Not only does it have an awesome sign-up offer for beginners, I mean, you could deposit $1,000 and get an immediate 10, 15, 20% return on your money because of all the free stocks that it has to offer. We have a link in the description for that. But what I also like is the fact that it has a lot of research tools. You can look up company fundamentals, how this business is doing in terms of revenue trends, income trends, balance sheet. And it also has a lot of predictive AI tools as well to make sure that you're picking the best stocks. And of course, if you want to learn technical analysis and stock trading, this is also a great option because they have dozens of different indicators and drawing features. Also in the description is a free guide on how to set up your Moomoo trading account, and we'll even throw in a 1-month subscription to our Stock Dads premium Discord membership where we do all of our live trading, real-time alerts, video courses, and so much more. And we also have a guide on how to use all our different features for Moomoo as well. Number two, understand what you're getting into and have realistic goals and expectations. Most people, when they get into investing or trading, are lured in because of what they see on social media with very large gains. Maybe someone doubled their money overnight, but realistically, that is probably not going to happen, especially if you're a beginner. And if you do that, then most likely it's going to be beginner's luck and you're going to end up losing that money. Maybe even losing more than you can afford to. You're not gonna get rich overnight with your little stack of Benjamins. Let's be perfectly honest, right? Most people, they only get an average gain of about 10% in the stock market every year. As a beginner, know the difference between trading and investing. For beginners, I would actually suggest that you start with investing, learn how the market works in a slower and gradual but very intentional way. I did a challenge where I day traded $1,000 in what's called options and was able to double my money in 30 days. However, that is not realistic for most people, in fact, and I've been investing for over 6-7 years now, so I have a lot of experience, and I've also blown up previous accounts before to get where I am today. It's not like you start from day one and you can just double your money and do that consistently, because consistency is the name of the game. Anyone can be a one-hit wonder and double their money, but then the next day they probably lose it all and they'll never tell you on social media. With that $1,000 that you're about to put into your investing account, make sure you're actually approaching with the mindset that you're going to invest. You're invested in this company's future, you're invested in this stock for at least the next year, if not 2, 3, 4, 5 years, and wait and see how it goes. Now, that doesn't necessarily mean you will end up holding for all 5 years or whatever, but you shouldn't have the expectation that I'm gonna buy in and I'm gonna make a ton of money and cash out and get into the next big thing. Once you actually have the experience of seeing price fluctuations, what moves the market, what doesn't move the market, how big does the market move on a daily basis, weekly, monthly, yearly basis, and you learn about financials and technical analysis, then you get into the more complex stuff. Don't go to school for one day and think that you can cure cancer. Moving on to step 3, make your first investment. Now, I want to make it very clear that once again, you want to start with things that are basic and simple and then learn as you go. And there's nothing more basic and simple than starting with what's called an index fund. Index funds are not sexy. They're not a half-naked hottie that will blow your mind or something else, but it will guarantee over a long period of time that you will make money. If you look at any 20-year period in the stock market's history, you'll find that you would be positive every single time. So over the long run, even though there are price fluctuations in any given 3-year time frame or 5-year time frame or 1-year time frame, in the long run, people make money. And that's why it's always been something that everyone says builds generational wealth. With a diversified index fund, you're actually buying into a basket that contains a lot of different stocks. You're buying a pie made up of all these different companies, whether it's Apple, Amazon, Google, Netflix, all of the major companies that are out there. And you also get diversification in terms of the types of companies that you're investing into. So you're not just investing into big tech corporations, but you're also investing into financials, healthcare companies. And if any one investment were to go awry within that fund, it won't collapse the entire fund. One example of an index fund that I like a lot is VOO. This one is a diversified index fund with hundreds of different stocks and in different industries. It's up about 59% over the past 5 years. Now you might be asking, should I invest my whole $1,000 into one index fund? And my personal answer is probably yes, because it doesn't matter too much, because in the grand scheme of things, $1,000 is not that big where you need to diversify extremely. It's already a diversified index fund. Now what you could do is buy gradually, spend $200 every week and average into your position. That's a very common strategy. Or you could just decide to keep a little bit of cash on hand at all times. Step 4, watching your investment. So once you get into that investment, you do have to watch it sometimes in a certain ways. Now you should not obsess over the price fluctuations on a daily basis. When you first start investing, you might think that when an index fund or stock goes down 5%, 10%, or even 20%, that it's game over. I must have gotten into the wrong investment. This is a stupid idea. I just lost money. What am I gonna do? No, you have to calm down, relax, look at that long-term chart once again, start researching into companies and seeing why, if any reason, that a stock goes down. And is it temporary reason, or is it a permanently damaging reason that's changing the fundamentals of the company and its ability to survive and thrive? If that's the case, then obviously you would reevaluate your investment. When you start investing, there's gonna be a lot of fear and uncertainty, and that is really a test for you to determine whether or not you can make the right decision based on facts and not just opinions. And if you do have an interest in trading stocks for the short term or medium term, make sure you actually start learning immediately right now. These are some of the things you need to learn: candlestick charts, support and resistance, and basic chart patterns like double tops, double bottoms, and channel patterns. These are the easiest ones to learn, the most effective ones to learn for beginners. You don't need 10,000 different strategies or indicators. You actually just need to be able to trade certain setups consistently, follow the rules consistently, and continue to refine and test those strategies. But until you actually learn these things, do not even think about trading, because you will have no idea what you're doing. You're gonna try to ask someone on social media who's gonna tell you the wrong answer, and then you're gonna lose money. And then you're gonna stop investing because you think it's all a scam. So don't do that. And a big tip that I have for people that are just starting to invest $1,000 in 2023, don't think about taking your long-term investments, selling them off, and putting them into a short-term trading account. That's how people lose their savings, because they don't know what they're doing and they lose it all. Instead, you want to actually do the opposite. Build up your investment account first, get a solid base, get a solid skill set and experience with the market, so you have a little bit, what to expect. Then you start your trading account, and as you make money in that trading account, once you develop and discover those strategies that work, as I mentioned, then you take those profits and you put it back into the long term, and then you just park it there. Because the long term, we know that stocks will go up. In the short term, your trading account, you could make a lot of mistakes. You could have a bad month or a bad year even, and that account will be wiped out potentially. Related to that, you need to get used to the fact that trading and investing your money is an emotionally based game to begin with, but you have to learn to manage and master those emotions, and don't let it affect you. Notice I said a lot of the time, practice, experience, research, mastering those things step by step, and then getting into the more complex stuff. And so emotions is a huge part of that. to determine whether or not you're going to be successful. So I'm going to put up this chart on the screen here right now. It's going to show trading emotions, and everyone goes through this journey. You might think that you're not going to get to this bottom here, but trust me, everyone gets to this point where you're like, what did I do and how did I lose this money, and I'm never going to make it. But until you reach that point, you haven't actually experienced what it's like to lose money and then build back from it. You have to go through some setbacks in order to level up and evolve. And lastly, step 5, growing your account. So congratulations, you made your first investment. This is just one of potentially hundreds or thousands that you're going to make throughout the course of your entire lifetime. So understand that this is a journey. And I think a lot of people get caught up in the fact that they want to have a goal of a certain amount of money. Maybe I want to have $1 million by the time I retire, or maybe $1 million by the time I'm 30 or 40 or 50. But it shouldn't just be that, because you want to make sure that once you reach your goal, you want to be happy and you want to have reached that goal through actions that you are proud of and that you enjoy the journey. So the journey is really making sure, going back to the beginning of this video, the very first sentence or two, that you want to build generational wealth because it's important for you to leave a legacy to your kids, your grandkids, etc. Right? So have that vision constantly in mind and be proud of that, be happy with that. And as long as you're making progress, even if it's not monetarily every single day, right? You can't always make money in the market, but as long as you're taking the steps to educate yourself along the way and you continue to make decisions that work in the long run, then you can really say, you can pat yourself on the back and say you did your best. And so make sure that you're doing your best throughout this journey to continue to squirrel away money. You don't just put in $1,000 and that's it, right? Continue to build that account up. It's not just about the gains, but also about the contributions to your account so that you have more money to invest with, and that money will make you more money. And you'll see that it's really addicting for a lot of people, especially if you're young or in college or even in high school or something. It's really hard to make that first $1,000 or $2,000, but once you put your mind to it and really dedicate yourself to this lifestyle, I like to call it, and this passion, then it becomes a whole lot easier to build up your account and end up becoming a wealthy investor. With that being said, guys, that's how I would start out with $1,000 in 2023 as a beginner to the stock market. If you want to see more videos that have a ton of great content and education like this, be sure to check out my description once again and subscribe to the channel. And I'll see you in the next video.